This honestly has to be one of the most boring cycles in crypto history. I'm sure you guys are feeling that way as well. And a big reason why, guys, is retail hasn't come back. Retail is what makes these cycles fun and exciting. It's why we get the big, massive explosions that we really haven't seen quite yet. And yesterday was a lot more of the same, more manipulation, more retracement in the market. I do want to talk about what's going on here with you guys. We saw one of the largest days yet again here in 2025, and we'll discuss kind of where we sit currently. We do want to talk about as well, is this a bear trap? Are we prepping for further retracement? So if you guys are new or haven't already, show your support for the channel down below. Hit that subscribe button, that bell. It's free to do. It'll keep you updated anytime there's new content live here on the channel. So a lot of what we've dealt with in this cycle is just the same money just being wishy-washy in the market, out of the market, in the market, out of the market. And unfortunately, because that is the case, the manipulation that we're seeing by market makers, by the large entities in the space, even I'll say institutional players, doing some accumulating on the spot side and shorting on the opposite side. I mean, it's been just the most annoying, boring, garbage market cycle we have dealt with. Yesterday was another big day of manipulation where we saw one of the larger liquidation days here in 2025. Just to show you guys, yesterday was, oh gosh, what was it? $1.095 billion worth of long leverage liquidations. This is following Monday's $1.65 billion in long leverage liquidations. If you guys take a look, since March, these are the largest 2 days that we have seen in terms of long liquidations. Okay. So it's been very clear that there is an agenda to, again, suppress retail, to hold the market back, to try to slow everything down. And we've talked ad nauseum about why that is going on. So I'm not really going to get into that in this video, but that's what we're dealing with. Just a lot of the same trash time and time and time again. Now, that being said, there are some good things. There are some good things that are taking place. For example, when we look at ADA and we look at the spot market, what is going on there, we're seeing a very consistent theme here. Big accumulation during the dips, removal of supply from exchanges. And I don't want to, keep repeating myself when it comes to that, but it's a very distinct trend, right? When this manipulation is taking place, when we are dealing with these drops in the market, we're getting some of the biggest days of accumulation. That's exactly what we want to see. For example, yesterday, $28.37 million worth of ADA removed from exchanges. Monday, $28.95 million worth of ADA removed from exchanges. In fact, if we look at this on the weekly, this is the largest week we have seen since August. So that's what we want to see. We're getting a very consistent fundamental movement there. And that's what we want to see across the crypto market. We want to see conviction remaining high, even though we're dealing with the manipulation and the drops in the market, which they kind of are what we are. We're stuck dealing with them again until we get either into much bigger times of volume or adoption is taking place. But that's what we want to see. I will say we've seen a significant retracement in terms of open interest in the crypto market. So every time we get one of these overblown ranges, for example, I don't know if I have that pulled up here or not. When we get to one of these overblown ranges where we have these insane all-time high levels of open interest in the crypto market, it usually takes something like this to kind of make everybody pump the brakes just a little bit to allow the market to get back to an organic nature, if that makes sense. Because we were up at record highs. We were up at $227 billion in open interest in the crypto market. We have now fallen down to $194 billion, so about a 15% retracement there. What we've also seen in terms of ADA is about a 20% retracement in terms of open interest. All right. We came down from 25%. We've seen about 190 or $1.95 billion in open interest in terms of ADA come down to $1.41 billion. So that's what we want to see in the crypto market. We want to see all this betting and high leverage and getting sucked really close to price. Just take a deep breath and back the F off for a minute. All right. That's kind of where we're at. Now, that being said, BTC is sitting on the lower edge of its structure right now. When we look at that weekly chart, we're sitting just below our 20-week moving average. So again, we need to have a close up above there. And we could obviously get that as we move into the weekend. In terms of ADA, we did come down And I noticed this yesterday. I wasn't sure if this was going to hold up or not, or if this was going to be where we kind of hit and stopped. We actually are building a pretty big bull flag, pretty big descending channel here. Currently, we're down at about our 200-day moving average, which is again exactly what we did back here in August. I'm not saying it's going to happen again where this is the moment that we bounce, but maybe. Everything is very much oversold right now. Stochastic RSI basically bottomed out. RSI in terms of ADA down near the bottom. Ethereum, just coming down to its 100-day moving average, like we talked about potentially taking place yesterday after it broke that 4,100 level. It's gotten down to a range where it's actually gotten a little bit of a bullish flip on the daily stochastic RSI. It is in fact oversold. And what's interesting about this is Coin Bureau posted this. ETH RSI flashes extreme lows for just the 19th time in 10 years. ETH's 4-hour RSI has dropped below a 15, a rare oversold signal. What's interesting is the last time this took place was, back here in April, right as ETH was actually bottoming, right before we went on some pretty exciting runs. So we're just kind of dealing with market exhaustion right now. That's really all it is. And sometimes you need these, again, when the market gets exhausted, when you can't break resistance, you need a little bit of a shakeout event. You need some accumulation to take place. And there are people on both sides of this, right? There are people that are saying, yeah, we're falling into a bear market, we're crashing, blah, blah, blah. The same crap we've heard 16,000 times in this market cycle. But what it likely is a bear trap, like we've talked about and dealt with many, many times before. Because guess what the markets continue to do? Every time we've talked about one of these bear traps, it's extended to higher highs, right? Now, this is what other people are talking about as well. Joe Consorti noted that Bitcoin is absorbing supply at a key psychological level. He suggested that once the selling from long-term holders eases and institutional demand persists, the setup increases the likelihood of a strong breakout heading into Q4. He said that's basically what I just said. And then what Wist said is markets can't soar forever. From time to time, there are bear traps, rapid corrections. Some dub it liquidity withdrawal. Others see it as liquidation of long positions. Yet, as history shows, ETH often recovers and becomes stronger than ever before. And that's true, guys. I mean, what I will say here is that we are still sitting at a point where there is more capital on the side, more than enough capital on the sidelines to move the market to the upside, right? We haven't been seeing stable withdrawal from exchanges. We've seen inflows to exchanges. Obviously, we've dealt with some institutional fits as of late in terms of their bags, kind of ups and downs, but this has typically led us to some pretty aggressive accumulation periods by institutional money. Enterprises have been accumulating in a big way. It's not surprising what's going on right now. Okay, so we just got to be patient. We just have to wait. I know it sucks. It's boring. I'd love to see BTC dominance get rejected at this 50-day moving average here. We actually are, it is topped out on RSI, stochastic RSI. So maybe that's where we get that rejection taking place. USDT dominance kind of floating in no man's land. I don't even think there's a week. Oh, well, it's at its 50-week moving average. So, I mean, maybe that's a promising sign of what's to come here, but yeah, it sucks. I get it, right? We're dealing with heavy manipulation in the market. Things are not quite acting the way that they should be right now, and it's because of that. It's because of what we've talked about time and time again. So we'll obviously see how today responds. I want to remind everybody that this morning we have our PC report. It's going to be coming at 7:30 a.m. Central Standard Time, 8:30 Eastern. Maybe the market moved in preparation for that, but we'll see what comes from it. So have a great day. Show your love below. Let me know your thoughts. Catch you guys in the next one. Take care.